Hello everyone, this is Silent again with another market review. We're looking at the NASDAQ September contract for 2025. This is the weekly chart. Today is Monday. We opened up and began rallying immediately up into that weekly order block candle. This weekly down close candle here, we are suspecting to be a bullish order block if price can create a buy side imbalance outside this range. Again, if we can start failing at these highs and start drawing back lower, 310, 775, and this buy side imbalance will be our draw on liquidity otherwise. If we can create a buy side imbalance this week and get a strong closure above these highs, I'm gonna use this buy side imbalance as a draw on liquidity later on, maybe during the next quarter instead. Dropping down to the daily chart, I mentioned on the last episode if we started to close above this daily bearish order block, we could start seeing a change of tide in the underlying narrative that we've been building, and our underlying bias maybe begin changing. So this is what I'm looking at going into the end of the week to see what we're going to do on this day. And unfortunately, I took a screenshot too late today, and it included today's the daily candle that just opened for Tuesday in this screenshot. So if you could imagine this candle not being there just yet, we just barely closed above halfway of this down closed doji on Monday's price action. And so going into Tuesday, if we can immediately start drawing above this high, I'll be looking for more expansion going into New York tomorrow and potentially a new high on the NASDAQ. But if we start to draw lower, I have nothing against, I have nothing against going short in this market to expect this is kind of inherent price action to send it lower. But as for right now, I'm gonna either stay on the sidelines or lean bullish until we get a strong rejection to the downside again. After getting under these lows and under these lows twice now and not seeing any candle closure below, our first expectation was to at least get another run up above these highs. But if we can't start rolling over after consolidating here a little bit, then there's no reason they shouldn't try and tag those highs just below 24,000, and that would be these rejection blocks here. On the 4-hour chart, again, just reiterating that point of kind of just looking at it from the outside. I'm not trying to force a bias on it too early in the week. We trade up through these highs and started to find some support in this up close candle after that pullback at the end of the day on Friday. We came back down into the lower portion of that daily sell side imbalance, rejected the low of the daily order block and started trading back up inside it. And after filling out that fair value up there, they started trading higher. I was watching here last night to see if it would reject this up close candle and start going lower, and we didn't see that, so we overtook that down close candle here. This could be potentially the levels that we'll be using to send price into new highs and up to the high of that order block, which is the rejection block level, up to 960s, 950s or so. If we're going to see a draw up into 950s, it would be from this level. And if we drop into this and reject hard, then we'll be having to consider something else. And on the 1 hour here, same kind of story. I just transposed the same levels from the daily, the 4 hour, onto this chart, and we have Friday's price action and today's price action that we're looking at. On Friday again, we rallied up and then sank it all the way into TGIF, closed up some buy side delivery here on the south side, and then price began drawing back up inside this imbalance. We rallied up twice up into this up close candle, completely filling in that south side delivery from the imbalance there, and spent time overnight accumulating inside this fair value gap. And then finally, by the time we opened at New York here, we rallied up into the rejection block and then just traded lower back towards that same 4 hour level. Not a whole lot of action today. It was very difficult, small range, choppy. A lot of manual intervention characteristics going on today, and we'll break that down on the lower time frames. The 15-minute chart, we rallied up, accumulated overnight, buy side imbalance here, we trade down into and create a new high, then sweep everything again into the imbalance before the open at New York, and then right on the open we begin rallying, trades back into this imbalance, and then creates a new high, which is the high of the day, and consolidated and then broke down. Very reminiscent of Friday's price action, just on a smaller scale. Takes out that low, fills up the rest of this imbalance, and drops down into these down close candles, which is an order block, just 3 times there. Not a whole lot of things to talk about since it was such a lackluster day, but we have to study these days too, so that we can understand the characteristics of these in order to get out of the way whenever they present themselves in the future. On the 5-minute chart again, I wanted to zero in on the New York price action. It was very ugly today, a lot of back and forth price action. If you've been watching the series so far, you could tell that this day is just not have the same characteristics as the price delivery normally does have for us. But nonetheless, let's begin breaking this down. In the pre-market, we drop down and form a low. And then after we clear that, down close candle is a buy here right on the open. We rally up twice. Third time after trading back into this down close candle. Create an imbalance on the way up and slam right into the rejection block from Friday. Price begins trading lower and does a market structure shift under the low that was created here, so we have a failure swing idea happening. Price is overtaken. There's a rate on buy side liquidity, and then price smashes back down into that imbalance, clearing another short-term low. So the reason why this buy side imbalance is not a bullish idea is because we smashed down into it not only once but twice, and on the second time we completely fail it. Although we don't close below halfway of this range, this could be a buying opportunity, but after we see it do a reversal in here, we would have to have either got on the sidelines or closed the trade and went short after this run into this rejection block here. Price sets up a swing high followed by 2 lower swing highs, so we begin trading lower, and after this candle closes, we form that swing high, and after we overtake this up close range, we could see that selling opportunities form in the upper portion of this buy-side imbalance, and the imbalance becoming inversion is confirmed after we close below with the body of this range. So we get an idea that it's going to happen in this candle and then fully close below it here. So any rally into the upper portion from the midpoint down is also now a sell, expecting it to trade below this sell-side liquidity that happens immediately, followed by a sell-side imbalance there, and price, every time we tap into that imbalance on the 5-minute chart here, we create a new low, and then run to it again, create a new low, run to it again, create a new low. But every time that this is happening, there's no real imbalances that is created on the way down, so there's no sell-side imbalances kind of characteristics that we'd be looking for in order to have this low as an expectation. And it finally happens here by the end of the day, which may have tricked some folks short, but we're running into the close of the day, so we really wouldn't be expecting too much more after 3 attempts here. This is kind of a kind of just a broken wing trick, trying to just get everybody that's missed all of this move into a final short, and just smashes them and pairs up that sell side liquidity with the buy side liquidity here, and just trading range into the end of the day. It's a very tough one today, a lot more complex than we would typically see. It's normal for Mondays like this, so don't beat yourself up about it if you didn't have such a good day today. Just understand that we can reflect on it and have a positive outlook for the next trading session. There's not a lot of other levels to talk about in here like we typically would, just because there's nothing really clean in this range or in here in terms of order blocks. I get that we retested this here once, which would be the cleanest, and then kind of the main levels that we would be paying attention to would be this 2 up close ranges for bearish order block idea, and we take this opening price and extend it in time. We see that there's no candles that violate this high after this opening price is traded to. It does get choppy like this sometimes, but seeing this kind of happen to you where you kind of expect it to be short maybe, or expecting it to be long, after they wipe out both sides of liquidity and then begin pulling it back up into the range, it's kind of just a reset idea. So after this high is created and they swipe it and then they drop down to a new low, we kind of reset everything back here and go back to this opening price and be like, okay, we just swept liquidity and then broke lower again. Okay, so we can't consider this price action too much, because it's just everything is just so close together that it's just complicated. It's complicated to understand the idea of overlapping price ranges sometimes. So you just have to kind of block out some ranges in price after certain events happen. And to me, whenever this happens, we swept a high and a low. It's kind of a reset on the range. So we just take a fib and kind of mark halfway point, go back to our nearest order block, and say, so long as the order block is violated, then this should be a sell in the premium range of here, even though there's nothing really clean to work with in this range. After this happens, and then we retrace up, it begins being a little bit more clean after it starts breaking down, if you know what to look for in terms of signatures with imbalances. Seeing this bearish drop into this buy-sell imbalance for the third time and respecting the high like this, my signals are already going off in my head like something is about to happen because this level is being respected again. So whether it just be a trade from the high to the low or a trade from the high to the midpoint, I'm seeing that this high is that, you know, it opens here and trades up as a bull-faced candle, and when I see the price trading off the high like that, my expectation is that one, this is an immediate rebalance here right at the high of this buy-side imbalance. So my nearest low is here, which is right at the low of the buy-side imbalance. It's a no-brainer short, just right there. So then we finally trade from the constant encroachment of this range down to the low and begin respecting the lower half to the low as a premium rate every time price trades back up into that range. It's a selling opportunity, especially after this up close candle forms. This is a due to swing into this balanced price range here. Price drops lower aggressively and creates an imbalance on the way. So we're separating this sell side delivery now from this range because there's an imbalance that's dropped below it. So we're allowed to put emphasis on old lows becoming resistance here because this is an imbalance. And every time we stab up into that range, we get a nice sell off from it. Turning back into the 4-hour down close candle, this thick black line here. Dropping down to the 1 minute chart again. I'm not going to try and emphasize too many levels in this range. I don't even have the first presentations marked out. I don't want to clog up price action from too many levels. I just want you to pay attention to the reaction to the 15-minute rejection block here on the lower time frames and what price does inside this buy-side imbalance from the 5-minute chart every time it trades down into it. Then finally, what does it look like whenever we trade outside of this range and then retest it from the low to the midpoint? And what kind of reaction we get outside of that range? We displace stronger below that low and then retrading into this range multiple times offers pretty nice selling opportunities. As an overall kind of perspective to have on a day like this, where it can be manually, manipulated. There's many things that we can look out for, and one of them is the idea of seeing large wicks on either side of the candles, and kind of seeing how fuzzy price action can be. During normal delivery, we don't get price doing this right here. If you've watched videos in the past from me or different ICT videos, we've spoken about this, and you can definitely see the difference in the way that the candles are presented and in relation to the body size and the wick size. Even on the open at 9:30, there's large wicks on both sides of every candle, and this is kind of a simple warning sign that if you're going to be in the market, you got to have larger stops than normal, and you need to be careful with position sizing and be aware of the risk of staying in a market that is literally being moved by real people rather than typical delivery that's controlled by AI. It seems like when this fuzzy looking price action happens, they're actually jamming orders in there, and it just creates this kind of wicky action where it's just sudden, it just sweeps right to fill orders regardless of what this structure looks like. And we can also kind of see that by just how high resistance everything was today. We get large up ranges on the way up that has deep retracements on it, almost every single candle. And after we create a high, it deeply retraces against everyone. So you go from a profitable position to break even or at a loss within minutes. And holding on to positions like this is very challenging for psychological aspects. And even entering in markets like this, you have to be on your toes, and because not only are you having to take the risk of a sudden retracement that forms a wick just like this happening to your position and instantly putting you in drawdown, you have to not be scared of that, but you also have to be in line with the narrative pretty heavily, because if you're not and you get caught short in a position like this, it rips against you very quickly. So if you're falling in love with an idea easily, it is not forgiving to do that in conditions like this. As we create our smart money reversal for the day, it is retested multiple times. You see that? After we create our smart money reversal, we shouldn't really see wickiness like this above that high. And really, the order block that's created in the smart money reversal shouldn't be retested this many times. Notice how it's tested 3 times. In a typical sell model, we would only have this, and then sometimes this, and then it would carry on from there. But after this drop down, it seems to, again, produce overlapping price ranges. So we're dropping down and taking some stops under this low with the bodies here, and it whips right against the high, and then it breaks it into that imbalance, and then whips right back above the highs again. This is typically what, all we would need for this to be a sell for the day. Sometimes the third time happens, and that's okay, but it doesn't usually deliver all the way back up into the highest candle, if that makes sense. So the amount of retracement that's happening is another kind of idea of a signature behind when price is high resistance. And finally, after that last push up, this is kind of another indication of a high resistance play. After we close down towards the low, if we close inside of it, it does typically retrace, but this is, a very strong retracement. Almost 80% of the down move is retraced here. And before we finally begin breaking down again, it starts cleaning up a little bit in terms of structure with this imbalance here, paired up with the high of the 5-minute buy side imbalance. But again, the wickiness is very troublesome to deal with while you're in an active trade, and be continuously psychologically sound during these wild retracement and whipsaw candles. You could be looking for a position and look to enter it, but because of how quick and spotty these wicks are acting, your fill, unless you're with a limit, your fill is very likely to be off, and that could be another burden that would be troublesome to navigate through. So hopefully you learned something today, and don't be too troubled about price. It was indeed difficult. Hopefully we'll see tomorrow clear up a little bit, If not, just be careful. There's no news that was on my radar for tomorrow, so just take it easy and don't overtrade. Be selective with what you're looking for. While we are in this kind of gray area between continuing a bias or deciding to change courses for a different direction. Hope you learned something insightful tonight. Please leave a like, a comment, and don't forget to subscribe. I'll see you all tomorrow.